Hello, welcome to another SIA Charts focus video. Today we are going to look at our new US dividend income strategy called the US Equity Income 5-Stock Model. It is very similar to the Canadian Equity Income Model that we have been running for over 10 years. It is available on the SIA Professional and Research tiers and can be viewed in the SIA Models tab as you see on the screen. Scrolling down is the model description for this model. What we are utilizing is the Dow Jones US Select Dividend Index for this universe. This index can be found in the Reports tab under US Stocks and then within the Specialty area of the tab. The Dow Jones US Select Dividend Index is an index comprised of 100 stocks that are selected by dividend yield. There are additional quantitative metrics such as dividend per share growth rate, dividend payout ratio, and average daily dollar trading volume. Components are then weighted by indicated annual dividend. On top of this, we are overlaying SIA's relative strength methodology to this universe by selecting the strongest names within the universe while also limiting the selections to only one stock per sector for diversification. Once a holding has been sold, it is replaced with the highest ranked stock in the relative strength rankings with a 6 or higher SMAX, provided no more than one per sector. If there is already a sector holding, then we will move down the list to the next alternative. The strategy will then sell any investment that moves down the yellow zone of the report with a 5 or less SMAX, or further if it moves all the way down to the red unfavored zone of the report. Back to the model, we have also incorporated SIA's equity action call overlay as well. If the equity action call moves to the unfavored zone, the model sells all equities and moves into a cash proxy of the same currency. If the equity action call moves to the neutral zone, newly sold positions will remain in cash. And lastly, if the equity action call is in the favored zone, newly sold positions are replaced immediately according to the buy rules to assist in capital appreciation of this model. In looking at the model, you could see the performance returns achieved. This model has been backtested since the end of December of 2012, and we have achieved a compounded annual growth rate of 10.65% versus DVY, which is the US Dividend Index, at 10.56%. S&P 500 has achieved a 10.62% return over the same time period. Having said that, we have achieved very comparable returns on a less risk-adjusted basis. As such, if we look at, for example, our risk-reward analysis, you could see, for example, our alpha is at 1.28, our beta is at 0.56, indicating that the volatility of this model in comparison to the market as a whole is much less. If you're interested in following this model, we could simply, as I scroll back up, go to the follow button and you will be added to our email distribution list for any notifications going forward. And there you go. Consider using this model as you see fit, particularly if you want to enhance your overall risk-adjusted returns of your other portfolio strategies that you are running. As always, remember to manage your risk in the markets and have a great rest of your day.